Hello all, Tony here. US stock markets rebounded on Friday night, snapping a 3-day losing streak, helped along by an inline inflation report and stronger than expected consumer spending data. Looking ahead, the focus this week will be on month and quarter end rebalancing flows, which may see selling in US and Japanese indices due to their outperformance. And then comes Friday night's non farm payrolls report. However, we do hasten to add its release could be impacted by whether Congress passes a new spending bill or a short term continuing resolution to keep the US government open. And that has to happen by midweek. Now, a government shutdown is very different from the debt ceiling issue, which we've seen time and time again, and it doesn't imply a sovereign default. Let's take a look at the charts of the Nasdaq and the S&P 500 to see where they are as we start this new week. All right, a quick check in on the weekly chart. And what we can see here is the NASDAQ 100 has broken higher above this trend channel resistance, and it has consolidated that break last week. When we drill down onto the daily charts, we can see this fifth wave advance is playing out. Now, here was our wave 4, which is the corrective move, which we identified back here between August and the start of September. And this is the wave 5. Now, we need to be mindful that this wave 5 can continue to extend, and it could see a move up towards 25,000, potentially up towards 26,000. Now, that is depending on the idea that the NASDAQ holds above a couple of very important support levels. Those support levels for me are this low we struck here coming in around 24,000 back in mid-September. If we were to start to see some weakness through this area, it would be an initial indication that potentially we have seen a completed 5-wave advance from the April lows, and that a deeper pullback, potentially in this 23,000, 22,500 area, is underway. Now, just to refresh, here is your 5-wave advance, wave 1, wave 2, your wave 3, and then the correction for wave 4 and wave 5. Now, this, in theory, should be the final move before a correction. It is just how far this wave 5 goes, which remains the question. As we said, above this 24,000 area, allow the uptrend to extend. For the S&P 500, a very similar story here. You can see the wave 1, the wave 2. Here is your wave 3 and your correction for wave 4, and wave 5 is underway. Now, providing that wave 5 holds above this low here from mid-September, coming in around 65.50-ish, I think that the advance can continue to extend up towards 6,800. If for whatever reason we broke below this low here, a sustained basis, of course, 65.50-ish, and then below medium-term support, which comes in around 6,500 to 64.80-ish, then you would start to think we have struck a medium-term high, and that a deeper pullback, potentially in the 63.50 area over here is where I'm getting that level from, potentially down towards the 6,200 support area, is underway. That's all for this week. Have a great week ahead.